Tesla recently explained how it was not affected by the global chip shortage. Want to know more about it? Watch till the end! Hey people, welcome back to our channel. In today's video, we will be looking at everything you need to know about how Tesla protected itself from being victim to the chip shortage. But before we start, make sure to hit the subscribe button and turn on the notification bell. Done? Let's get started. Even if the rationale behind the outcomes remains a mystery, the data is simple to understand. In the third quarter of 2021, General Motors dealers in the United States supplied 446,997 automobiles, a decrease of 218,195 units, or about 33%. Tesla produced 241,300 units in the third quarter, exceeding expectations and increasing by 73% over the third quarter of 2020. Tesla investors expected and received growth. It was a severe decline for GM, but not one that was unexpected. In the middle of the quarter, GM cautioned investors that unit shipments would be lower by around 200,000 units. The chip scarcity is why GM executives predicted the dip. A global scarcity of automotive semiconductors has racked the industry all year, resulting in a 5 million to 6 million unit reduction in global light vehicle output. The third quarter marked another milestone for Tesla. In the first 3 quarters of this year, the company delivered about 627,000 automobiles, an increase of nearly 100% over the same period in 2020. While other automakers have shut down factories owing to a scarcity of parts, Tesla is effectively working at full capacity. The Q3 issue could be caused by 3 factors: demand, earnings, and industry scale. In 2021, demand for all cars will be high, but demand for electric vehicles will be extraordinary all over the world. These could be reasons why chip vendors are giving Tesla more chips than usual. It's simply more convenient and profitable to supply EV manufacturers. However, there are a handful of other factors to consider. One example is supply chain management. Wedbush analyst Dan Ives tells Barron's Tesla has a more efficient supply chain. In addition, Ives points out that Tesla now only has 2 manufacturing facilities, one in Fremont, California, and the other in Shanghai, China. Tesla, he believes, has a better chance of obtaining chips in China. In China, the chip scarcity was not as severe as in previous months. In September, 3 US-listed Chinese electric car manufacturers, NIO, XPeng, and Li Auto, delivered over 28,000 vehicles. That's a monthly high for the 3, up from around 10,000 vehicles in February 2021, when the Chinese Lunar New Year and a chip shortage hampered sales. Along with geography, Tesla's outperformance is due to advances in chip technology. Tesla, according to Morgan Stanley analyst Adam Jonas, employs more sophisticated chips than traditional automakers. Those might be easy to come by and replace. Tesla has been acquiring new semiconductors and revising its software code. It's not as simple as replacing a chip. On the company's second quarter earnings conference call, CEO Elon Musk noted, "You also have to reinvent the software." Finding new chips, writing new firmware, integrating with the vehicle, and testing in order to maintain production was an extraordinarily intensive effort. Tesla deserves credit for coming up with a novel solution to the chip problem. The final reason GM appears to be lagging behind Tesla could just be a matter of timing. GM had a poor quarter, while the rest of the industry fared well. Despite the market being down 13%, benchmark analyst Mike Ward tells Barron's that sales at Toyota's Lexus subsidiary, Hyundai, Kia, BMW, and a few other automakers were all up year over year in the United States. The good news for GM and others is that it appears like things are improving. All automobile investors wish for more consistent output. Investors in Tesla, on the other hand, will be looking for additional growth. Analysts estimate that Tesla will deliver roughly 230,000 vehicles in the remaining 3 months of the year. Tesla investors will anticipate more after the third quarter results, chip shortage or no chip shortage. After announcing excellent deliveries on Saturday, Tesla's stock climbed. In Monday pre-market trade, shares were roughly $800, up about 3%. On a choppy day for the market, stocks ended up 0.8% higher. The Nasdaq Composite Index dropped by 2.1%. The S&P 500 and Dow Jones Industrial Average both fell 1.3% and 0.9%. During a Monday earnings call, Tesla CEO Elon Musk stated that the company is weathering the worldwide chip shortage by changing its vehicle software to support alternate chips. The scarcity has thrown the auto industry into disarray at a time when demand for new vehicles is at an all-time high, resulting in factory closures, longer wait times, and higher pricing. In a matter of weeks, we were able to change different chips and create the firmware, Musk added. It's not just a matter of swapping out a chip, the software must also be rewritten. Tesla's revenue for the quarter was $11.9 billion, with a profit of $1.1 billion. Tesla isn't the only company affected by the global shortage. With car demand at an all-time high, manufacturers throughout the world are experiencing manufacturing limitations due to a shortage of chips. Tesla's future growth, according to Musk, will be contingent on a quick resolution to the worldwide semiconductor shortage. He stated, "The worldwide chip scarcity issue remains pretty bad. For the rest of this year, the slowest component of our supply chain, which includes the vast spectrum of semiconductors used in Tesla's vehicles, will decide our growth rate. Everything from Tesla's airbags to the modules that control the vehicle's seatbelts is powered by chips, which means Tesla is lacking components that are critical to the vehicle's safety measures." The module that handles the airbags and seatbelts was a significant difficulty this quarter, Musk remarked. Clearly, you can't ship a car without them. Pat Gelsinger, the CEO of Intel, one of the world's largest semiconductor businesses, recently stated that the industry may take a couple of years to catch up to the rising demand. During Tesla's Q1 2021 earnings call last week, CEO Elon Musk stated that the company was experiencing some serious supply chain issues, citing the chip shortage, and even compared the company's logistical hurdles to those faced during World War II. Tesla's vehicles have multiple processors for various control systems and the infotainment system. The manufacturer is most known for using a microprocessor that it built for its self-driving software. Samsung is the manufacturer of that chip. Tesla revealed that by switching to microcontrollers and designing new firmware to deal with new chips from various manufacturers, it was able to avoid being too harmed by the semiconductor scarcity. In Q1, we were able to navigate through global chip supply shortfall concerns in part by pivoting exceptionally quickly to new microcontrollers, while simultaneously building software for new chips made by new vendors, the company noted in its shareholders' letter. The manufacturer did say that supply chain concerns could continue to plague them in the coming quarters, although Tesla only had to shut down its Fremont facility for a few days last quarter, which isn't as bad as some other automakers' production halts. With that, we are at the end of the video. If you found it interesting, make sure to hit the like button and subscribe to stay tuned for more exciting videos. Let us know your thoughts in the comment section below. See you again with another exciting video. Until then, bye.